In today's episode of ReFi Podcast, we speak with Tomer Bariach of Flori Ventures. Tomer has had an incredible journey in Web3 all the way back at Bancor's beginnings, exploring how to create these automated market makers that allow a transaction to emerge without a trusted intermediary. He has pioneered some of the early experiments looking at how crypto can be used to enable community or complementary currencies, and he's also touched into the complex problem of how to enable a universal basic income using Web3. Tomer offers some very thought-provoking questions about the kind of token incentives that we are creating as we scale the carbon market on-chain, and what we should be prioritizing, precision or scale. John and I learned so much in speaking to him, and hopefully this is the start of many conversations. I think a lot of content can emerge from this, and we are so enjoying this process of making sense of the intersection of climate action and Web3. Stay tuned for another amazing episode dropping this week, and we got some exciting news about season 2 around the corner. Tomer, man, thank you so much for coming on. This is so fun. How are you doing today?
I'm doing great. Thank you for having me. Very excited about that.
I felt like the last time we spoke, it was almost as if we'd always known each other and we just like meeting for a reunion. So it's great that we get to have you on the podcast and introduce my friend John. Would love to just hear a quick recap, man, about your journey. Tell us the story of how you got to where you are today at Flori.
So my journey starts somewhere at around 2013-14. I was in the Hebrew University. I studied psychology and economics, and I was searching for something to do within the economic world that is not working for the government, which was pretty hard to find back then. Not like today, that it's like, oh, I'll go to crypto. It wasn't that much of a reasonable sentence back then. I met a guy called Bernard Liatar. He was giving a lecture in the Tel Aviv University. And in this lecture, he was talking about something called community currencies, which for me was like mind-blowing. Communities can issue their own currencies to reimagine their financial and social structures by just understanding how to redistribute the goods and services that they already have. I flew to Ghent in Belgium to see a project that Bernard did over there, and I was pretty amazed. It was a little neighborhood with about 50% first-generation immigrants, a rough neighborhood, as they call it. But you get to this rough neighborhood, and they have more volunteers than they need. It's a green neighborhood with little gardens where they grow their own food. I'm like, how did that happen? I studied the subject of community currencies, went back to Jerusalem as a young root entrepreneur, started my own currency called the Jerusalem Lira. It was a local currency trying to support local businesses to create a sustainable economy. Along the way, I met Eyal Herzog and Gale Ben-Arzi, who were doing Hearts local currency on the other side of Israel in Givatayim, and we collaborate and did a collaboration. It was actually pretty successful. Like businesses using it, people trading using that currency. But then at some point, the currency just started collapsing, which was a pretty disappointing thing. Just like, okay, we failed, normal economy won, we're going home. But then from the research that actually not me, the team of Eyal made, they understood that what we were basically doing, we were printing money in a closed ecosystem. We were doing the same as Venezuela, just in small scale, which doomed to fail. That's where the understanding of the need for liquidity came from. The idea of Banco, the first automated market maker, is actually named after Keynes' proposal, where Keynes in the 70s in Bretton Woods proposed to have a currency called Banco to be backing all the currencies around the world and to be the reserved currency. That's what Banco was the first idea, to create a currency that can always be paired to all of the other currencies in order to allow liquidity for small economies like Hearts and the Jerusalem Lira. I joined the Banco team. Big ICO, we did some interesting stuff over there. First of all, today everybody knows what's automated market makers. Back then, we needed to fly to Switzerland to explain to regulators what are we doing. It was like, we allow liquidity to move from one place to another. Beside that, we did a community currency project for the first time with the liquid community currencies in Kenya, with the group of Will Roddick, Grassroots Economics, which was pretty exciting project. It was adopted later by the Red Cross. Being in Bangkok, building all kind of token economics model, being a product person for most of my journey. At some point, I left Bangkok to try and find some other journeys. That's where I met the Good Dollar team and Yoni Asia, where they came out with the idea of, can we create a currency or a token that can give basic income to all the people around the world? I got the task of building the token model, which I was very excited about. We launched Good Dollar about a year and a half ago, reached since then 300,000 people, even more, 80,000 daily active users. It's based on the idea of DeFi, the status quo. The idea is that using DeFi tools, we can generate a win-win situations of impact investors earning money while supplying UBI. The people who bought Good Dollar at the beginning already made 90% of their money while supplying UBI to all those hundreds of thousands of people. It's very strong in Vietnam and Nigeria and very active there on a daily basis. At some point, I decided I want to follow a different journey. I actually came to meet Maria. Maria, I was her advisor. She's the founder of Flori. And I was a consultant and helping her a little bit with blockchain investment. And I actually came and I made her a proposal to invest in something called Earthbit. I wanted to compete with the traditional carbon credit market. At some point, she told me, why not, instead of competing with the voluntary carbon credit market, why don't you join me as a co-founder and support with your token economics knowledge as many people as possible that you believe in them and in their journey. And I never wanted to be a VC, but I love the ecosystem that they have there so much. I love Maria and the Celo ecosystem in general. So it was a very socially appealing, way more like the community that was building around it was way more appealing than being the offer of being a VC. So I'm a product person that is investing in projects that I like. And that's my journey.
So fun, man. I'm so excited to hear and unpack a few things. I want to dive into kind of how you approach token economics and your vision for sort of future community currencies, but help me understand what it is about Celo and Maria in particular that resonated with you. You've obviously been in this space for a while. You've met a lot of people. Like, what are they doing differently that attracted you?
What I've learned in terms of product strategy, the crypto market is driven by bull and bear markets. And people behave. There is a Naval talk that I really like about what kind of people do you need to be like you link yourself to. And he talks about the fact that if you people that have the right drive and the right mission and and you can trust them, you should stick to them. And the crypto market tends to have one behavior where we're in the bull market and a different behavior when we're in the bear market. Finding people who are mission aligned, has the abilities to perform and want to be your partners that won't change their face when the bear market comes is not an easy task. So for me, it was an easy take, right? Like you meet the right people and you know they're running in the right direction, just joining them. So that's on the personal level. On the more technical level, it's the fact that I met a community of tens of and hundreds of entrepreneurs all speaking the same language. Like John, you said, like we met and it's like we know each other for so many years. And it's not that common to have those conversations. And once you find yourself in a community where again and again and again and again, you have those type of conversations, you're like, this is where I want to be. So it's mainly about the people.
Yeah, man, it's so fascinating. And I think it's interesting to see, I don't know, just the values that are driving that kind of connection and that chemistry. We had a chance to speak, with quite a lot of Celo people in this space. And I know they're quite new, but I'm super optimistic and curious to see where all of this ends up and like who ends up really becoming kind of dominant ReFi chain in this space. So really super interested in that side as well. And I'm curious to know like what the thesis is at Flori that you guys are working on and what you're investing in particular and kind of what your theory of change is.
Mm-hmm. So first of all, we really like to support early stage strong people in terms of like where the company is. So this is on one level. Second thing is that we have a strong preferences to decentralized things, not only products that are on the blockchain, but are actually driving a decentralized vision of performing stuff. So it's about early stage, decentralized, and then a double bottom line of the performance. So for me, being someone who is a strong entrepreneur that I feel like I can trust, that has early stage idea, that is telling me how is he decentralizing his idea. It's like, here we go. This is where I want, this is one I want to spend my time on. And that's in terms of like our investment strategy. Obviously, we have some surroundings to it, but the idea of after we do that is what do we do with our founders. The idea is not just to give money. The idea is after we give money, we always say that our community is our startup. Me in the token economics, I've been an advisor to some big companies, let's say. And my ability to scale myself is impossible. But the ability of our community of founders to scale their time to each other when they need as an endless value that can be given. And this is our personal startup. How do we hack the value chain of our community? And then what we do, we take them through a process of a demo day where we help usually between 10 to 18 companies every 2 months. Do a demo day to last demo day we had 300 investors coming to our demo day, which we make sure that the whole chain is value aligned. The investors know what to invest in, what type of project to expect. The startups know who we are, and that's basically our strategy. And then usually, that's basically our strategy, I would say. Some things I'm excited about are like community efforts or undercollateralized loans, ReFi, all of those.
I think that that idea of the peer mentorship and the kind of horizontal support seems to break a common pattern we have where all of the attention in a network or in a community is focused on one sort of central figure. Even in kind of the creator economy and musicians, like there's a lot of value to be created from fans connecting with fans. And so thinking about this, like scaling the value of the network by this sort of peer mentorship idea, I love that. I'm just curious, why is decentralization so important?
As nice and passionate the people I meet are, when they will succeed, they will become a big company. And in big companies, they will suffer from the same problems that other centralized entities are suffering. Unless, switching one point of failure with another point of failure because we think is nicer, will not scale and win the needs as they are. So as nice as people could be, I don't trust people enough as much as I trust well-designed incentive structures, economies. And that's why decentralization is so important for me.
It's that interesting paradox where because you don't have to trust anyone, you can trust them more deeply. Exactly. That makes a lot of sense. This idea that kind of spreading the risk, really, right? Like spreading the risk away from one central point across a further kind of surface area means failure is less likely or is going to be more contained. Yeah.
it's going to be more contained, and the ability of the network to regulate itself is existing in a decentralized network. The ability of a company to regulate itself is basically impossible, as the transfer of information is limited. The abilities of nodes in the ecosystem to be reviewing other nodes in the ecosystem is, what do you define a node in a company? Like VPs, directors? Who is reviewing who and why? In a decentralized system, because you have people who are aligned on their incentives, but they're not under the same umbrella, they have the ability not to agree on performance or on acts and review each other.
There's an interesting piece here that I'm kind of wondering to get your thoughts on around like the relationship between incentives and behavior. So I studied with BJ Fogg at Stanford University, who in my mind has really kind of cracked the code on what human behavior is and how it works. And he has this particular model that says behavior happens when three things come together in the same moment: motivation, a desire, willingness to do something; ability, how hard or how easy it is; and then a prompt, that moment that triggers you and causes the behavior to occur. And if all three of those things aren't present, then the behavior doesn't happen. And so if you want to, stop a behavior from happening, you just remove one of those elements. But the interesting thing is his model basically represents in a visual way that ability matters much more than motivation in the context of behavior change. It's a kind of compensatory curve where, ability is more heavily weighted. And I've been really surprised in my work in crypto and even just before crypto about the role that incentives, which are really motivation affecting interventions, play in all of this. How do you see this relationship between incentives, motivation, ability, prompt? Like, curious to understand your perception of the role that incentives play in influencing people's behaviors in a given complex system.
I think we should differentiate between single acts and to ongoing change of behaviors. And when you look at my ability to, and I know I'm simplifying here, right? But my ability to help an old lady in the street, it would be way more about my ability rather than my motivation to help her. Because I can, and like something happened and I'm like, it's quick and I'm prompt, like I can do that. But in the Bitcoin world, you hear about it and it's nice. And then slowly the philosophy starts drilling into your consciousness, into the way you see the world. Now, between your ability to buy Bitcoin, which sounds, all of us said it in the beginning, right? We wanted to buy Bitcoin. We're like, what the fuck do I do? Like, what am I supposed to do here? And it's like that, right? We're like in 2013, 14, when trying to buy Bitcoin and it's not very clear what you do. I'm in Israel. No one is accepting my credit card. But at some point, my ability is very low. But in the philosophy level, I'm fluent, decentralized, Bitcoin changed the world. Now, it took me another 6 months after that I bought my Bitcoin, because I didn't understand what KYC is and why do they want all those papers for me. And I think that's the thing of those systems that lives around us, that start slowly meeting us in more and more places. And Bitcoin is an easy example of it, because it represents a philosophy that you hear in conversations with your friends, and then you hear about it in TV. And then when you have the decision to be participating in such a financial system, is because you were already convinced to the motivation of everybody else, and you become part of the movement. Now, and that's where most of the people in crypto are always, because that's how we grow. We always grow with more people who has great motivation, but they're like, and I launch a token, and you come in and say, well, why do you want a token? And they're like, because it's a token. And that's where it's like they're part of the movement in their motivational and their spirit, but they're still not in their ability to perform. And that's where I meet that. I don't know if it's directly But that's like, I think for most of us, decentralization became part of our identity as well. And like this movement that we're participating in.
Yeah. That's what was coming up for me as you were speaking. It's about identity, right? The philosophy is one thing, the stories we tell are another, but it's actually the stories that we tell ourselves about who we are and our role in this place. So I'm curious, Tomer, to hear your thoughts about, like, given what you just described, we touched on decentralization, incentives. What is happening in this whole ReFi movement? What do you see?
There is a clear need to redefine the value of land in its simplest form. Like, there's what's his name? Malcolm X, who had a great speech about Malcolm. No, what's his name? Something X? Never mind. But there's a great speech, sorry that I don't
There's a
know
Malcolm X.
about the fact that every war at the end of the day is about land. And it's about the fact that the value of land is the value of land to the people. And it's funny because all of the wars are talking about the value that you can extract from land. And, we're talking about it a lot in the carbon sense, but carbon is only one sense. It's about the ownership of native people to their lands. It's about the amount of animals that are extinct on a daily basis because we needed the trees. It's about the fact that the only way for us to understand the value of a land is if we basically wipe it off. We need to cut down all the trees and then dig down a hole and take whatever minerals we found out of the ground and then we sell them on the free market. And that's the only way for us to understand the value of land, which is doesn't make sense for so many people. And this basic need of redefining the value of land, of what is land worth for us as commons. Because land is valuable in the extractive way only to the individual who owns it. But what we lose from that land is the value that it gives us as a common. And there is a need to realign the incentives on that subject.
I was speaking with a friend recently, and she was kind of driving at this exact question. We were talking about natural capital-backed currencies, and I guess the way I'm thinking of this, and I'd love to get your thoughts on this, Tomer, is a natural capital-backed currency is not backing the currency with the physical capital of, like, the wood and the minerals it's backing it with the health of the natural capital. And that's quite an important distinction, because if it's by the physical capital, then it has value because you can cut down the trees and take them away. But if you're backing it with the health of the forest, cutting down the trees is destroying the value of your currency, right? Is that, like, can you gut check that on your working understanding of natural capital currencies?
So it's not only natural, like, capital currencies. It's about the fact that it shouldn't be about the land. Like, it is at the end of the story about the land itself. But that's in the why. The how should be demand driving mechanisms to the health of those lands, right? And then the voluntary carbon market is an easy example of that. It's the first example of that for us, right? It's the fact that, I can buy a land, like plant trees. I know it's the worst example, planting trees. We can have all discussion about that and the type of carbon, but the most simplified way, I can buy a land, plant some trees, bring back the health to the land, and I would get a certificate that I can sell to other people. And that certificate is the asset that is driving demand to the health of that land. And there's so many ways that we can now, when we understand that driving demand to the health and redefining the value of that land, thanks to those type of certificates. that we can issue, right? And they could be carbon, and there could be, I don't know, depending on how many endangered animals do you have on your land. There could be any demand-driving mechanism that support the rewilding or the health of the land.
When I was first coming into this space, Tomer, I started intuiting similar pattern that you just described. And I've been working on a communication of what I sort of see the ReFi movement to be. And it seems like there's almost three pillars emerging. The first being, stabilizing the climate largely via the carbon market. But the second is what you described around recognizing that biodiversity is actually, in many ways, a more important measure of planetary health than carbon sequestered. But then there's this third pillar in my mind around instituting just systems and recognizing how imbalanced our society is in the way that we relate to each other as humanity. And it seems like these things are kind of tangled in a way, and it's hard to address one in isolation without looking at the others. Are you seeing a similar trend? Do you feel like those three pillars are misaligned? I'm curious to get your thoughts on how you're kind of looking at these patterns and, what's emerging in ReFi as a whole.
I traveled India for quite a long time, and there's an area in the southern part of North India that is suffering from the floods, from water management systems. And I remember being there and seeing the locals just cut down the trees and sell them. And it was very basic. They need money. Here is something they can sell. They are selling it in the free market so they can get their immediate needs. The financial system as it is doesn't appreciate the end user of its economy as a value-driving agent in a way. If you think about it, when I do it when I help, I do it when I help people design their token economics. I always say, the idea of token economics is pretty simple. You have a goal. In order to reach the goals, who are the agents who are giving a consensus, a social agreement around that goal? After you find them, distribute the new issued currency to those people, and then give them access to whatever resource they're merging together using that token. If you think about in the Bitcoin example, you could see that we're giving it to miners because miners are the people who are giving us a trustless system, and we're giving the ability to change the ledger, which is our common resource on Bitcoin, using Bitcoin paid as gas fees. If you will look at the last monetary expansions that are happening in the US, and 80% of the money of the US dollars were printed in the last 2 years. Who were they printed to? Who did all this money got to? If you look at those 900 pages, you understand that only a fraction of it went to the end user, which is the common people, and most of it went to the top of the pyramid. Now to talk about the end users in India. Now, only once we align the financial system to be supporting its people to have their basic needs and align the first two subjects, we can find a solution. You can talk about value to a land as much as you want. I've seen those, you're talking to someone in India and it's a reservation, it's like a reserve, and there's donations from all over the world and they're very aligned on the Commonwealth. But at the end of the day, there's someone and he's poor and he sees a resource and he will cut down that tree to sell it. So yes, it's very tangled. Unless you solve all three pillars, you won't solve any.
And this, is the strongest argument I've heard for UBI. I've been sort of orbiting the concept for a while and am I guess I haven't learned enough about it to take a strong position. What is your kind of can you unpack UBI a little bit, and especially in the context of how crypto can help kind of enable that new economic primitive and that new economic reality for people?
Mm-hmm. So, basically speaking, the idea of UBI is to say, if we give people their basic needs, they will have easier life in participating in a healthy economy, fulfilling themselves and the value that they can give to the economy. Now, there's many research that's been done about that, but the article I like the most about it was, the name of the article was, "Did you really need the research to understand that giving people money will help them?" Which which was a very basic research
Amazing.
to be made. But basically, when you look at UBI and its discussion in the fiat world, there's a question of where will the money come from. And if you look at the numbers that are needed in order to supply a basic income to all of the people, you understand that even if you'll give up, let's talk about the US for a second, on all of the social benefits that exist today in the US, you still won't have enough money to be giving UBI to all of the people. The idea of UBI is to give an unconditional basic income to all of the people. Now, after you understand that the numbers just doesn't make sense in the classic, in the fiat world. It just doesn't. We need to understand that there is a solution here that has to be redesigned in order to be solved. Now, if we, for example, play the game of token economics, would say, well, we are imagining an economy where the consensus maker of its economy are everybody. Just like the people are giving value to Bitcoin or its miners, we could imagine an economy where we say, just by the mere fact that you are a human being, you are giving our economy value because you will participate in our economy. Now, what gives the miners their value to behave? It's the fact that you believe in this financial system, so you're willing to invest in it. That's why they are rewarded with Bitcoin, which means that you can use your trusted system. And that's the basics of how can crypto help us redesign universal basic income. It allows us to create a win-win situation between the investors and the consensus makers of new economies. And that's how crypto help us do that. In the way of how is it related to regenerative finance, I just got a video that I literally started crying. I got a video from a professor in Venezuela, an economy professor in a university in Venezuela, and he talked about the effect of good dollar to the people in Venezuela, and he talked about the fact that what they're doing, good dollar today is not giving a lot of money, it's giving like a few cents a day, but still doing it to hundreds of thousands of people. They're gathering that and they're using it to buy airtime to people who are in need. Now, people know the value of trees. Once we will manage to generate economies that are actually supplying their basic needs of people, and not just little airtime, because this is only the first step, their need of extracting land will vanish immediately. Nobody wants to go and cut down trees as a habit. People want to fulfill themselves. They do it because they have an immediate need that they have to fulfill. Fulfill that immediate need, and you will see them adding way more value to the global economy and taking way less from the earth.
When your scarcity needs are met, your need to extract resources is gone.
Who can judge you for that? I would cut down trees. Once, like I have a daughter, she's 6 months old. The day I see her crying because she's hungry, I will cut down a tree and sell it. Simple.
Mm-hmm. This is huge, man. I have to confess, it really opened my eyes to this. I hadn't seen UBI in the picture as you've just described it as prominently as I have today. So thank you, Tomer.
Yeah. And as part of a climate response, I think,
Yeah, absolutely. So Neil Spackman on a Twitter Spaces once, he's a phenomenal permaculturist who's done some of the most impressive work in the most desertified plants in the world. Said, if you don't address the reason why people are cutting down trees in the first place, don't plant more of them. And I absolutely love this sentiment because everybody's focused in, many ways on planting trees. But actually, if you don't stop the economic incentives, it's pointless. You're just wasting money. You're just circulating it, right?
You're just circulating more land.
My thought here, Tomer. Yeah, exactly. You're literally just circulating it. So my thought here is like, you guys obviously ran a really amazing experiment at Good Dollar, and it's working. You guys are making traction. There's also Impact Market, which is on Celo. Can you give me a landscape of who in crypto is experimenting with UBI, who's making traction and why? And just like what your thesis is on how we really get this thing into the mainstream.
And on top of that, does this have to come from the decentralized community, or is the sort of economic core, like fiat world, a player that can help move us towards that?
So, generally speaking, my philosophy when it comes to decentralization is a process and a goal, not a 0 to 1, like not a yes and no. It's always a process that we do. And in terms of the players that we see, there's 3 players, I would say, leading players in the UBI world. You have the UBI token, that is really the proof of humanity, and I'm also part of that movement as well. Bought a lot of UBI, part of humanity. There is Good Dollar that is supported by eToro, and each one of them has a bit of a different angle that they went after. And there is the Impact Market, and I think. If I want to very simplify the differences and their needs, Impact Market went after the on-the-ground communities in needs and reaching them as a measure to adoption. Good Dollar went over a very specific economic model, and UBI is focusing way more on solving the identity problem that we have, which is each one is as important. It's only when we unite all of them together. It's the same as what I love about those solutions, that they don't compete with each other. No one, there's no such thing as a competition. A person should be generating income from this project and from this project and from that project as well. And only that way we could supply in the future their basic needs. And that's where it comes to that world. But I believe there is a big connection actually between land and basic income as well. I think at the moment, there is, at least in the developing world, ownership of a land in the developing world is way more common than it is in the developed world, right? For us to buy land is basically impossible unless we drive to another country. In Israel, it's a small place, buying land is impossible. But if we look at Africa as an easy example, right? If you would manage to find a way to give lands their value of how much they added to the earth, okay, and you lower the barriers. We know the barriers to entry today to the voluntary carbon market are insane, right? But in an utopian world, we could imagine a guy in Angola making some efforts to bring his land to, let's say, either to do it as a regenerative agriculture or forestation of his land, and then be making income out of that. And that would be generating his basic income. I think that's where the dots connect. Because at the moment, we look at it as projects. Someone is buying a land and is doing a project. But that's not how the developing world is working. In the developing world, we need to reach a place where people who already own land are behaving a bit differently in order to generate a basic income that will allow them to create a sustainable income and land. And that's where I think, that's the end goal.
I think this really hits on Charles Eisenstein's kind of premise in sacred economics that property ownership in itself is a construct which has resulted in a lot of this misalignment. And actually, if you redistribute the incentives towards the value that's added to the land, the dynamics change significantly, right? And so I'm really resonant with what you've described here about figuring out how to create a scalable model to incentivize people to restore degraded lands all over the world. And the cheaper the land, the easier to acquire. And if we can create some tokenomic structures that are scalable in community context, I think there's a lot of promise here. And I can't help but be reminded of my friend Jeremy Agnew's project out here in Portugal, where he's basically trying to do this at a kind of 270 hectare scale at a regenerative eco-village to say, how can we acquire this much land for the sole purpose of terraforming it, bringing down carbon, but creating a local economy and a community who is incentivized to restore the land and to increase biodiversity, sequester carbon, and to bring it all on chain so that we can maintain transparency and trust within the community, but also to interact with the voluntary carbon market on chain. And I don't know, I think these local grassroots on the ground experiments with people physically putting their hands in the earth are really where crypto gets the most interest from my part, because it's one thing to create a kind of esoteric and ethereal narrative about internet money, but if it doesn't touch the soil, if it doesn't touch people on the ground living life together, it feels just so abstract. So I'm curious, Tomer, like which projects in your deal flow or otherwise are coming to mind about people who are really making an impact on the ground in communities and physically moving society forward.
So I think it's like it's less of the known ones that are doing the impact, the work on the ground. There's Cambiatos that I really like. They are working on EOS network. And they're doing community currencies that are backed by like ownership of land that is natural reserves, like, which is beautiful work done by Carla over there, which is one. There is another one that I really like called Share It, which is they're actually not doing they're not doing it on chain. It's just funny money that they're doing. It's with also a community currencies that the distribution model for community currencies is that about the change of behavior in of agricultural stuff. Like if you did a bit more for permaculture, here's a 4 points for you. If you did, and it was validated by a few peers. And also like the things that are touching like the most basic people doing stuff on the ground that are, as you said, like that's the important part. Like we are playing this very high level game all the time, right? Volume, carbon, like, and I'm part of this game as well, obviously. Like, how do we get more volume, bigger, stronger? But there is some detachment that exists today between this boom, $2 trillion crypto economy that we are building to affecting actual people doing something on the ground. So those are like two that comes up to my mind that I would say like worth checking out in terms of their actual work on the ground down with communities.
I wanna just pull us up on the topic we were just talking about, how valuable it could be for these local people to be able to participate in the global carbon market. I'm bought into the idea on one level, and then the adversary in me is thinking about how can we maintain integrity and mitigate against the risks of double issuance, double counting, double claiming in a decentralized context, right? Like, so what's your thought? Like in this new ecology of money, which is a bit of a wild west, like how can we mitigate against some of this fraud that is ultimately serving as a barrier to the adoption of something like carbon markets, right?
So for me, it's about, I literally double invest on anyone fighting hard to reinvent the verification models to a decentralized version of carbon issuance. I think that's the most crucial part. If we can move from this centralized version of verifying, I think this is the biggest pain point. The fact that at the moment it has to be done in a centralized way is the biggest pain point for scalability in that sense. Now, the fact that something is decentralized doesn't mean it's not manual, right? Like if we look at in my mind, I would think about as the difference between the encyclopedia that we used to have when we were younger to Wikipedia that we use today. Encyclopedia and Wikipedia, in both of them, terms are being checked by professionals, right? But in encyclopedia, in the encyclopedias that we had back then, you had a centralized entity. That's their job. They were a committee that they need to check every term and to make sure that those are the right terms. And that's where the carbon market is today. In Wikipedia, still terms are being validated to make sure those are the right terms. Not everybody is just writing whatever they want. But if you look at their very sophisticated peer reviews system that they have, that is basically decentralized, this is where we should be looking for a world where there is a decentralized verification system, which is, I think, one thing that this is the main thing that needs to be solved. The other thing that I think, this is my pure thoughts, future will prove me right or wrong of everything I'm going to say from now on. But I think more things that needs to be solved on the carbon market would be fungibility. Like the carbon market, because it's so precise at the moment, it's a non-fungible assets, right? Not NFTs in its current form, but the certificates that you get today are non-fungible. Right, they're non-fungible,
right.
And this lack of fungibility is, yes, it's very great when you have an ape and it's non-fungible. Not when you want to drive a market that needs to be creating demand and transactions on a bigger scale, and that's another one. And the third thing that I think needs to be solved, I actually think that giving out carbon certificates is actually is a very bad token economics incentive structure. Yes, future will prove me right or wrong here. Because if you look at that, if you think about from the supply curve distribution, right? If you think about Bitcoin as its supply curve distribution, Bitcoin is minting in its beginning 50 Bitcoins per block. And then it's divided between how many, simplifying down, to how many computers are connected, right? In the carbon market, we are giving you, connected one computer, here's one computer certificate to you, which creates exactly the opposite curve than has been created in Bitcoin. For me, I think what would win at the end would be something that would say, let's mint 50 tokens per block, but distribute between how many carbons did you put into the ground per block, right? And then the curve will look the same as Bitcoin curve, which will create a gold rush to creating, to bringing carbon back to the land. So those are my thoughts on redesigning carbon markets from a token economics perspective.
So it basically brings in the time dimension, right?
Exactly.
That's the
and the term like stock to flow. We know that stock to flow in terms of like minerals. If you look at the stock to flow of Bitcoin is very similar to the stock to flow of gold. And if you look at the different behavior of stock to flow of different minerals, you could see the different market behaviors that can be created around that. Carbon is a measurement system, not a stock to flow economy, which creates scarcity, which is what we want to create in an opposite way here.
Love it, man. So interesting. We were talking to Michael and Fred from Open Forest Protocol and dove deep onto this, an episode that's about to drop. As listeners are hearing, we'll already have it out. I'm curious to hear who else is in this space. Who else is trying to crack this measurement, reporting, and verification dilemma for carbon and other natural capital assets that are coming to mind for you?
I love Open Forest, and we will be. We will be one of their backers, obviously. Still doing the last details. But there is also Color that I really like. That's a pretty new coming into the market. And they talk about the fact that if Vera and Golden Standard are like the Ferrari, where everything is precise, they want to be Toyota. They're saying, well, our carbon issuance is not that precise, but it's based on satellites and it's decentralized, which is, I like it. You can, this is the kind of behaviors that I'm looking after. I don't care about being precise. I care about scalability. I want to save 10,000x more land. And yes, someone will earn a little bit more or a little bit less because of that scalability. I don't care. So Color would be another good example.
Stabilizing the climate. It's the right thing.
Yeah, it's like that's
great. I actually hadn't come across them yet. I'd love to, if you can. I want to give you maybe like 10 or 15 minutes after this in our allotted time to just have you dump some links and make sure we get everything of what you've shared. This is great, man. So the really fascinating thing, Tomer, is I feel like you have a really interesting lens on incentive structures in the formation of economies and specifically how to scale meaningful climate action. And I wonder, how are you getting your ideas out there other than through conversations with founders? Because for me, I've spoken to a lot of people in this and I've learned so much with you today. How else are you sharing these thoughts with folks?
I actually don't. Not because I don't want to, because I don't really know how. Because my time is so busy and I don't get enough time in order to sit down, write down the ideas in a way that I will feel comfortable sharing. You understand what I mean? It's still my name on those. So when you write an article, it needs to be I don't like to use this term, but a bulletproof, right? And it's not a bulletproof. None of the ideas I just told you is bulletproof. Those are my ideas. Enjoy them. Open source idea for everybody. That's my spirit. And I was a consultant for token economics for many projects before I was a VC. And a lot of it was, I always had, people were approaching me and I had to ask for money in order to give them my ideas. And what I like about being a VC now is that I can give you money to give you my ideas. Just
it's actually in your interest.
It's in my interest to give you my ideas, which is such a better position to be in. So I'm actually trying to double down my investments on the sectors that I believe in, which is undercollateralized loans, regenerative economies, universal basic income, community efforts, and spend as much time as I can with my founders of trying to open source the information.
Let's talk for a few minutes about this concept that's circulating around an ecology of money. Right now, anybody with a computer in a couple minutes can create a new system of money based on a smart contract. And this is, I think, creating an enormous number of opportunities to rethink how money works. And this is, to me, a lot of the potential and essence of what kind of the tools we have in regenerative finance, but it also probably poses some threats. So I'm curious, what do you think of when you think of the ecology of money? What do you see here and now and what's worked in the past based on your experience with Jerusalem Lira and complementary currencies? And then what do you see extrapolating out into the future, kind of the ideal scenario so that we can kind of help to start shape and bring that to life?
So the first thing, first we need to understand the situation that we live in, which is the ecology of economy and what we're talking about before. The fact that our economy is today suffering from the same diseases of like culture, agriculture, and monocurrency. It's the fact that a field of wheat is very efficient. A single currency system is very efficient, but put a disease into the field of wheat and all the field will die. Hyperinflation, zero interest rates, never mind, put aside. Put those diseases into an ecosystem and the ecosystem will die. Put it into a jungle and one of the species will die. And I think the most important part of this multi-layer economy that we are building is less about the fact that people will be moving from one economy to another, as much as be living in a multi-layered economy that would create way more resilience to the dangers that can come by from what could happen to the economies. Now, something that have to be understood is like why are we still using the dollar before we're going to designing new currencies, right? Like the only reason we are still using fiat money is because they have a monopoly. It's not because it's such a good currency. The smoking gun of this monopoly is taxes. It doesn't matter. Like the three of us can have an economy of frisbees, right? I'll throw you the frisbee and you'll give me a guitar lesson. You'll throw him the frisbee. He will give you a record or something. And he will throw me back the frisbee and I'll give him some advice. And on every time we threw the frisbee, we would have to pay our taxes in dollars or in fiat or in shekel or in whatever it is that we did. This is the smoking gun of the monopoly that is important to understand. Now, so that's that. I think something that is important for us to start moving into when it comes to designing new economies is a bit moving out from the speculative performance that we're used to. Like most of our design systems are designed to be a speculative asset, right? Like there's three type of usage. There's a store of value, a medium of exchange, and a unit of account. And more of our economics design are designed to be a store of value in most sense. And I think it's important we start moving to more of a medium of exchange type of assets in order to actually create on-the-ground usage of new economies in order to reach the massive scale. And that's calls for a lot of like mind shifts in the way we look at the sponsoring models of those economies, of how do we design them, on the get rich quick that everybody really like in our crypto space, and is important to see. And yeah, that's where the movement that I feel like we should be looking at. I hope I answered the question.
No, it's a fascinating subject and obviously very complex. On that last piece, I guess what kind of springs to mind is how with these new smart contract-based token systems, you have eyes on the full kind of monetary economy. And that means you can measure something like velocity of money across the entire system. And that to me is like a really exciting and interesting field of learning about what metrics to monitor and mechanisms or interventions you can take, like demurrage, for example, to kind of foster increasing velocity of money, shifting the utility of a currency more from storage of value to medium of exchange. What other like kind of, I guess, like crypto economic primitives or mechanisms are you excited about that are like dials we can tweak here?
I don't know if you call it primitives, but I think liquidity is something that needs to be have like a way deeper discussion than what exists today in the crypto world. I think the way liquidity is seen today is a very basic type of liquidity. The classic liquidity pools that we see are a solution, but also liquidity should become part of the token economics of every system being built, and not only something that you need to be taking care of when your investors are asking on the channel when Uniswap. Like, no, this is not when liquidity starts to become a discussion. Liquidity is actually a crucial part. It's your connectivity to the rest of the financial world. Now, in a more sophisticated liquidity ways, I think someone who did it very well is BitCloud that needs to be discussed in that sense. Like, if we look at BitCloud model, they're using actually the Bancor formula over there, where every time you buy an influencer token, you deposit the BitCloud to the reserve of the BitCloud of the influencer token, and more tokens are being issued, which creates this infinite liquidity solution, and creating assets with a small market cap that are not as volatile as other small market cap assets. So I think the liquidity strategy is and will be more and more of an important, a crucial part of the design of economic systems. So that's something that needs to be doubled down by everyone who is designing an economy.
Yeah, I think, I guess the relationship you described here about the ecology of monies is, this theme of resilience, right? Providing a lattice work of different experiments to play different functions. And you kind of encourage the movement as a whole to look at a medium of exchange as a way to increase the usefulness of these currencies. And I suspect, the more communities on the ground implementing crypto as a medium of exchange and as a kind of identity staple, the more adoption we'll see and the more utility it will drive. I'm curious to understand, like, with your background at Bancor, you've seen AMMs evolve, you've seen this whole decentralized finance market emerge. You've mentioned a couple times in our conversation under-collateralized loans. It kind of seems like a curveball out of left field. Why are you interested in that? What role does it play in all of this?
So people like to talk about two problems as if they are separated problems. One problem is the zero interest that the developed world has in its banks, right? Like, you put your money in a bank and you have zero interest rate. And then there is another problem, unrelated problem somehow, in the developing world, that if you want to take a loan and you are unbanked, underbanked, or even have a bank account, the interest rates that you will be taking for your business would start at 15% monthly. Those unrelated problems are actually one problem. It's a problem of a money flow and the ability of efficiently distributing the liquidity which is in banks, or in our case, inside protocols. Now, in the existing DeFi world, we're talking about over-collateralized loans, because over-collateralized loans is something that can be done in an anonymous world. But I believe under-collateralized loans would be it would be 1,000 times bigger market than the over-collateralized loans that exist today, and would be the connector between magic clouds money that we have today to actual people on the ground using this money to be creating a sustainable financial life. Okay. Now, it actually also relates to the fact that the reason people don't have credit is because they don't have a credit score. They don't exist in the existing financial world. That's why you have no ability to give them a loan. The under-collateralized loans would come only when we will manage to solve the problem of sovereign identity, of a person having a financial identity in the new financial system that allows him to put into risk his new credit score that is driven by a peers review, okay, and allows them to actually take money from the West, from the places where the interest over money is zero, and put it in the hands of the people who are paying today 15% or 25% or 40% monthly interest rate, and take that into creating businesses on the ground. This channel could only be solved by crypto. Try to transfer money now from Israel, where I am, to Kenya, to someone in the village. It would be, I can't even start describing like how hard it's going to be, not to talk about making sure that my loan is being like paid back. But if we look at existing models, not models that we need to invent, there are already models of lending using community reputation that exists today. The fact that you go to a community of 25 people, you tell them, listen, guys, I can give a loan only to one person out of those 25 people. The loan is going to be at 15%. I'm going to give you $200. You guys need to choose who am I giving the loan to. You give the loan to that person, and if he pays the loan back, you tell them, if you'll pay it back, I will give a loan to another 2 people. This time it will be in 10% per month, but it will be $200 for 2 people. Now it becomes the community's need to make sure this loan is successful. And you have a way of making, now you created a community credit score. It's their shared effort to make sure that they maintain their credit score. And those kind of models connected to a pool of money in DeFi is what's going to connect magic clouds money to people in need on the ground, to real economy on the ground.
So right now, in order for me to get a loan, I have to have an identity in a nation state as proven by a passport, a driver's license, proof of address, right? Those are kind of the main mechanisms for me to prove identity. And I then have a form of credit score that is kind of my background history of all the transactions, all the loans I've had, missed payments, etc. And I can go to a bank, show up in person in the United States and say, here's my identity, this is my credit score. I've got an income through Toucan. Please lend me enough money to buy a house, right? And they take all these factors in conjunction with the asset of the property itself and determine whether or not I get this loan. In the DeFi world, they basically say, okay, the technology isn't there to provide these identity checks. And actually what we're going to do is just ignore trust and just enforce that in order for people to receive a loan, they have to deposit more than the value of the loan itself. So I go to Aave and I put in 1 ETH, which is worth $3,000. And Aave will loan me up to 75, 80% of my ETH. And if the market changes and suddenly my loan of, $2,000 goes below that liquidation threshold, they just sell my ETH and recover the loan. I get to keep my $2,000, but I've lost my deposit collateral. And what you're saying here is actually there's a new layer that's enabled by a different kind of identity verification in the world of Web3 that says, actually, we can create a trusted system where people have a sovereign digital identity that's not tethered to a nation state and let a community of actors attribute trust to specific individuals in the system and to loan people on a basis without collateral. Is that kind of what you're saying?
Muhammad Yunus is doing those type of loans in billions of dollars today. And those reputation systems are beginning to be brought into the Web3. And the combination between Muhammad Yunus' model of community reputation and the DeFi world. And there is also something that always have to be staked in the new models as well. You need to have a new credit score that can be slashed, just like your Ether is being slashed, right? So in a perfect world, in the future utopian world, like this group of people has $1,000 that is staked, and then another 1,000 reputation score that is staked. And that's how they can take a loan of $2,000. Now, if they won't pay it back, their reputation score on chain will be slashed. And I see more and more of those models that are coming to me today, and I'm really excited about it.
So yeah, could you break down the top 2 or 3 that you see that have the most traction or you're most excited about?
Ethics Hub.
Under collateralized.
Ethics Hub are doing like a great job. I think they're doing it on XDAI. They're giving loans.
Spell it. How do you spell that one?
Ethics
Ethic Hub.
Ethic
Yeah.
Hub.
Yeah.
Ethics Hub. Okay.
Yeah. Ethic Hub.
That's an interesting one. Have you looked into Goldfinch? I recently came across Goldfinch.
Of course, I was about to say Goldfinch. Goldfinch are leading the game, I could say, and they're super interesting. Like, So Goldfinch is another great example of people doing amazing work on that subject.
Yeah, and I think this is part of how Web3 matures, right? To overcome this. I mean, the fact that there's no identity on Web3 or no kind of identity tied to an individual in the real world. I think that's kind of a feature rather than a bug, right? Like that's why it's permissionless. I don't have to show you my ID. I can just create an account on my own on my computer. But now on the layer above that, building an identity layer. And I think Goldfinch specifically, I noticed they've got this kind of privacy preserving NFT you get called their UID when you do the know your customer checks. So it's not that there's no KYC. It's just that that's kind of done off chain. And then they issue this on chain token that's tied to your account that allows you to participate in the system. I mean, yeah. I'm really, thanks for raising this, Tomer, and this is like a super exciting. I didn't realize that the interest rates on loans in the developing world were that insane. I mean, that's 15% per month.
Credit is everything, right? Like, how can you do anything without credit? Like,
so I recognize we've covered a lot of ground here in our nearly hour and a half, Tomer. We've touched on your background, how you got into the space, what your thesis is at Flori Ventures, and how you guys are connected to, all these amazing startups pushing these different boundaries. We touched on the different pillars in ReFi across stabilizing the climate with carbon markets, biodiversity, and then looking at social justice. We looked at UBI and how crypto could be used really to address some of the core underlying incentive flaws, which has led to this extractive economy. And we looked at kind of undercollateralized loans and the role that a sovereign digital identity system could play in enabling the power of DeFi to go to the masses in the developing world. Are there any missing pieces to the puzzle of the conversation today that you wanted to plug into this, or maybe any closing thoughts to the ReFi movement as a whole?
Yeah, I have a closing thought to the ReFi movement. I think the ReFi movement, first of all, is, I think, one of the most exciting movements that we have today in the crypto world. Like, I have a thought that I would like to share with people who are not in the ReFi movement. Like, the biggest market, and this is another bet that we can talk about it, but as NFTs were to 2021, the ReFi movement will be to 2024. This is a little bet with the word I would like to put here and see how right I was in a few years. That's, I think, the most exciting movement that we have today, and people should jump on board.
And so given, 2021, we broached $2 trillion crypto market cap as a whole. In 2024, how big of a market do you think ReFi is going to be?
ReFi is going to reach, I would say, about 400, 500 billion. Right, just ReFi market. That would be my bet.
Let's talk in 2024.
Well, let's talk before.
It's funny, I already had the number, but
yeah. Talk before then, because I think the next conversation we have, it would be great to unpack a bit more how we get there from here, right? Like, what do we do first, second, and third? That's what we're about.
That's beautiful. Well, hey, anybody listening, this is Tomer Bariach from Flori Ventures. And if you're a ReFi founder looking to get connected with climate conscious capital and some brilliant minds who really understand incentives and how community works in Web3, hit up Tomer and Maria. And we are so grateful, Tomer. Thank you for everything you've given. How can people connect with what you're doing? Is it Twitter? What's the best way to get in touch?
It would be either my LinkedIn or my email. I'm okay with cold emails. Just know that it will take me a little bit of time to get there. So we can just add my email here, and people are welcome to email me or reach out on LinkedIn. Sadly, I'm not on Twitter.
Awesome. We'll throw your email in the show notes. Thank you so much for that gesture, that gift. Look forward to talking to you again, and have a great rest of your day, Tomer. Talk soon.
Thank you, everybody. It's a pleasure.